it's a stock that makes news, and it's Super Retail Group. It has unveiled a new 5-year strategy that includes expanding its store network from 790 to more than 900 stores by 2031. It says it will target a larger share of its market across automotive, sporting and outdoor categories through store expansion, new formats and online growth. There you can see some of the brands it has. It will invest about $30 million a year over the next 3 years in its Ignite transformation program. Supercheap Auto is expanding its EV-related product ranges, new store formats, broader fitment services. Rebel, significant regional store expansion and deeper range optimisation. BCF, more superstores and larger format stores, plus entry into the four-wheel drive fitment market. And Macpac, continuing its store rollout and increased brand presence here in Australia. So, what do our experts make of Super Retail Group? Andrew, let's start with you. And I guess, more broadly what we're seeing in the retail space, given what you've just said.
Yeah, I think it's interesting. I mean, look, the retail sector as a whole is probably going to struggle. I mean, it's certainly been struggling for the last little while in Australia. I mean, we've been through 14 consecutive quarters now of a per capita recession, which effectively means that Australian retailers have had a spending problem from the consumer for a long while. And yet, as is always the case, the best companies in any industry seem to manage to weather their way through the storm with very limited damage. And you're seeing that with Super Retail Group. I mean, Super Retail may not be the best retailer in Australia. I think that crown is probably held by JB Hi-Fi, but it's certainly one of the best. Return on equity and return on capital are always in double digits, well above 10%. Earnings and sales have doubled over the last 10 years despite all the headwinds, and they have grown with a high degree of stability, and that's a particular hallmark in this space, in discretionary retail, so that's incredibly well done for them. And they have negligible bank debt, although thanks to leases, they wouldn't pass our normal filters. And yet, because of this fear we're talking about in the market and the crash that's happened in Australia, but maybe not yet in the United States, you can now buy them on a PE of 12.5. So to Mark's comment before about as a value investor, things are starting to look pretty rosy. 12.5 may not be the kind of super exciting for a retailer. You can often get them, high single digits, very low double digits, but it's getting right back towards the trading range where a value investor looking at a business with this kind of track record should start to get quite excited. I'm going to say a hold for today because I think you'll get it at a better price, and that's the purpose of this show. But 12.5 overall is not a bad PE to be paying for a company that grows earnings consistently faster than inflation and dominates its niche.
Okay, so potentially get it for a cheaper price. Mark, you have that view?
Yeah, exactly the same. If without the macro lens, I'd probably give this a buy. But mildly concerning. It was a lot of it's a good old-fashioned marketing department got a hold of that rebrand or the 5-year plan thing. I think someone may have run that through Claude or something because there's a lot of buzzwords there. But I don't normally like that hearing those. But I mean, it's very uncharacteristic of a Super Retail Group. It's a quality business. I do agree as well with JB Hi-Fi, but at the moment I wouldn't be putting new cash into either. Because look, these cyclicals can stay down for a lot longer. We'll have earnings coming up in August. I don't think you're going to have any rush to need to buy this before then. You'll probably be able to see that earnings play out. And I would say somewhere around the midterms, is where I would think that they're going to be. There'll be a lot more certainty around rates. There'll be a lot more certainty around Iran. There'll be a lot more certainty around the government in the US. And that's where we're very much targeting to be probably fully allocated again if something nothing untoward happens. Great. I can't add much more than what Andrew said really from a company standpoint. I think at forward PE we've got around about 10, but I just think you get it a little bit cheaper. But have it on your watch list. Maybe we encourage our clients to have a plan and an entry price where they'd like to and. You can we set an alert or they set an alert and make sure you stick to your plan because usually those plans laid before the panic happens work out quite well in the end.
So we'll call that a double hold, but both watching potentially for a buying opportunity in the months to come. Maybe, as Mark says, wait till those August earnings drop. All right, that's our stock of the day, Super Retail Group.